Alright, what's up guys, this is Kanye from Reverse Trade. I wanted today to use the same video that I did yesterday, so kind of to do something more advanced with that. Because yesterday I talked about the idea of scratching your trade whenever it's too late in the session, and I kind of want to go more expanded on that. I kind of want to expand a little bit more what I talked about. So give me a second and I'll just share this video on the group so people can be aware of it, because it's even better if people can join live. So I'll just take 2 seconds and do that. And then whenever that's done, I'll come back and show you exactly what happened today and how to really scratch your trade. Because scratching a trade is really going to be important. From what I've experienced so far, and it's been only a few months that I've been day trading, scratching my trades when they don't work is really, really crucial. Like if you don't scratch your trade, you're going to miss out on a lot of opportunities basically. Because many trades, when you scratch them correctly, and this is the key, you're going to see that they wouldn't make any profit in any case, right? It may happen that sometimes, yeah, you're going to get a profit, but overall, most of the time, if you're going to scratch a trade, it's usually going to lead to a better result. So I'll just share this right away. And I'll wait a couple of moments. I'll tell the guys in the Facebook group that if you are watching this in the Facebook group, I'm super happy. I'll do my best to answer your question. If you have any question, type them somewhere. I should be able to see them. And I like to do the video live. I think it's just better that way. So we'll get into it. What I want to show you is a trade that I took this morning on AUD USD. And for some reason these days, the market is really going sideways. So I could show you other pairs, but the market has really been sideways a lot. And I'll try to show you other pairs, in fact. This was not sideways that much, but Euro USD was really sideways. See, so we had this one consolidation here this morning, and then straight away we broke out, but just to go into a new consolidation right there. Okay, so we didn't move that much at this point. We didn't go really further, and then we went in the range for the whole session, and then we broke down. So we came back to the original position. Right, so this is the type of stuff that's going to be frustrating a little bit if you're going to be a day trader and you're going to trade trends. But in any case, what I want to show you today is really how to scratch your trade and why it's important to scratch your trade. I'm going to expand on what I talked about yesterday, and I'll jump into the trade I took on AUD USD this morning. So the idea is simple. I was looking at this pair, and what I noticed is that we had this first range yesterday evening. We had this second range early this morning and in the London session. Now we broke down of the range. Okay, so this is pretty good. And then this is a 15-minute chart. I'm usually going to trade on a 5-minute chart. So it doesn't make a big difference, but I'll just go back to this 5-minute chart. And from the time we saw this right here, I started to wait for a strong enough move to the moving average. So I was using the 20 and the 50 moving average. So I'll add the 50 moving average right here. And I see a comment here. I'll try to see if I can get it. Let me check. If you guys have any question about this video, just let me know. Post a comment below. Hey, what's up, Sergio? It's good to see you here. So yeah, I love it doing live videos. That's great. So what I was doing here is I was looking for a retracement to a moving average, right? And this is exactly what we had here. So I started to see price coming back strongly to the moving average, and I started to see this, by the way, low here was a previous support. Okay, so we had this support right there, and this was previous support. So I was really, really cautious here. I started to say, well, I'll see what happens here, because I don't want to get short at this touch here, because we have this strong level just below. And as a matter of fact, price really pushed strongly, right? You can see here that we had this big bullish engulfing candle right there. And so this is a sign that it's not the best way to enter if you're going to get short, right? You might want to wait and see what happens. So that's what I did. And then price came to retrace even more, so deeper. And then we had this engulfing candle, bearish engulfing candle right here. So then I started to get in the market at this point. But this is around 10:15, 10:10, 10:15. So it's a little bit late in the session, meaning that if you're going to get in a trade like this, you might want to be careful of when you're going to take profit, right? You might not want to get 2-to-1 at this point. It could be really tough to get 2-to-1. So you might want to get 1-to-1, and that's what I was aiming for. So by entering the trade below the candlestick, stop loss a little bit above the high, I was able to get 1-to-1. Okay, I was able to get that 1-to-1. And we could of course measure it, but I know that I didn't get the 1-to-1 on my platform. So I was able to exit that trade, at least partially. And that's the point here. Because then right after, price came back and really started to go in a choppy way, right? Really, really sideways. No movement. Right? And this is classic, as we talked about yesterday, that you're gonna see movements like this when you're gonna trade when you're gonna go into intraday trading. When you're gonna trade intraday, meaning like let's say the New York session, you're gonna see those moves, and you're gonna see that at some point things are kind of dying a little bit, right? That's what we can see. That price goes in a direction strongly and then dies. Now, whenever price is gonna die, right? If you're gonna be short, two things can happen. Either one, price gonna go back up slowly, but going back up, hitting your stop loss, or the other way, while price could go down a little bit, right? Slowly. But the chances that now that your trade is gonna work out are a lot reduced. They're not as great as they were when you had this volatility here, this kind of big volume. So this is what I talk about when I talk about scratching your trade. When I saw that price came back to this level here, and when I saw that price action was choppy like this, I said, fine, that's enough. I'm just going to get out of the trade at this point. So I exited the first half of the trade here. Second half, I'd break even. Because I knew that chances for now price to come back down strongly and hit the take profit at, let's say, 2-to-1, right, it's a lot lower. It's a lot lower than previously. And I don't want to get into trading this same trade with the next day, right? Because I don't know what's going to happen the next day. Could be totally different, right? We could have a continuation, or we could have a move back up to hit the stop loss, right? So it doesn't make sense for trader intraday to keep this as long as it hit the stop loss or take profit. What I've noticed is that most new traders are going to think about that, and they're going to want to keep the trade open until it hits stop loss or take profit, right? That's what I see every time, all the time. And that's the easy way to do things, right? It's pretty easy to keep it open. But you're going to reduce a lot your chances of succeeding. If something is not doing as you thought it would do, then you better exiting, right? Then you better not staying in a trade. We're talking intraday here. And this is a lot different than exiting when the trade goes against you, right? Here it's not about going against me. Here, the only thing I talk about is the fact that price is dying, and we do not have the same movement we had. And don't forget that when I'm going to exit or scratch a trade, I'm usually going to be near break even. I'm going to have had some profit before. See, so I had this profit before. And then after that, price is coming back here to break even. And then I'll think about exiting the trade. So don't think that, let's say we're in a trade, like, let's say you enter here, okay, at this point. And I hope this is clear because it's getting pretty small. But if you're going to enter here and you see price is coming back up and your stop loss is like here, don't exit here. Don't scratch your trade here, right? It doesn't make sense because you exit only when you're wrong, or the other possibility is when the volatility is dying. When what you thought would happen, the strength of the move that would happen, it's not there, right? Then your chances of succeeding or winning the trade are a lot more reduced. So that's what we talk about here. So guys, if you have any questions, just type them somewhere. I'll do my best to answer them, but I really hope this is valuable. If so, like the video, please. Check out the Facebook group, isartotrade.com/group. You can join the Facebook group for free, and I really look forward to connect with you. Check out also the podcast this week with Chris Capri. I know this is going to be valuable. I know that there's a lot of stuff in that podcast episode, and I really know it can help you out. So check this out. Let me know what you think. If you have any feedback, let me know, and I'll see you soon.